Welcome back students and scholars. In this video, we are starting ASC 235 Notes to Financial Statements. And our focus is simple but very important. Notes explain the choices behind the numbers. The face of the financial statements gives us the numbers, but the notes tell us the accounting methods, assumptions, and policies that shaped those numbers. Without those notes, users may see the result, but they may not understand how that result was created. So do not treat notes as decoration or extra paperwork. In financial reporting, notes are like the instruction manual for the financial statements. And honestly, if the instruction manual is missing, even a very beautiful statement can become confusing very quickly. ASC 235 fits in the disclosure layer of financial reporting. First, accounting standards tell us when to recognize an item. Then they tell us how to measure it. Then the financial statements show where it is presented. After that, disclosure explains the policy choices behind recognition, measurement, and presentation. This is why ASC 235 is placed at the end of the reporting chain, but it is not a weak or secondary topic. It makes the earlier steps understandable. If two companies both report inventory, revenue, or depreciation, users need to know the policies behind those numbers before making comparisons. Same number, different policy, different meaning. That is where ASC 235 becomes powerful. Now let us understand the official structure. ASC 235 is the parent topic titled Notes to Financial Statements. Inside it, the main operative subtopic is ASC 235-10 overall. This is a very focused topic. It does not have a long list of subtopics like some other standards, and that actually helps us. The topic is not trying to teach every disclosure in US GAAP. It is focused on accounting policy disclosure. So when you see ASC 235, immediately connect it with this idea. What accounting policies did the entity choose? And how should those significant policies be communicated to users? In exam language, ASC 235 is not a jungle. It is more like one clear road with a few very important signboards. So what does ASC 235 actually cover? It covers significant accounting policy disclosures. These policies include the principles, bases, conventions, rules, and practices an entity applies while preparing financial statements. But here is the key word, significant. ASC 235 is not asking management to write a novel about every small internal accounting routine. It is asking management to disclose policies that matter to users' understanding of the financial statements. The controlling idea is fair presentation. The selected policies should help present financial position, cash flows, and results of operations fairly under GAAP. So the focus is not maximum words. The focus is useful information. Now this slide is very important because it prevents a common misunderstanding. ASC 235 does not replace the specific disclosure requirements of other ASC topics. For example, lease disclosures are driven by ASC 842, revenue disclosures by ASC 606, and goodwill-related disclosures by ASC 350. ASC 235 is about the accounting policy note, such as what method was selected and how the entity applies it. Other topics may require detailed quantitative tables, roll forwards, maturity schedules, sensitivity information, or other item-level disclosures. Think of ASC 235 as the policy description layer. It tells the reader the method behind the item, but it does not become the full disclosure rulebook for every item. The scope rule is refreshingly simple. ASC 235 applies broadly to all reporting entities, and there are no scope exceptions. Public companies, private companies, not-for-profit organizations, and other entities preparing GAAP financial statements need to think about significant accounting policy disclosures. ASC 235 affects the notes. It does not change recognition, measurement, or the presentation of numbers on the face of the statements. That is a key exam point. If a question asks whether ASC 235 changes the amount recognized, the answer is no. It explains accounting policies in the notes. Disclosure is powerful, but it is not magic. It cannot turn a wrong recognition decision into a right one. Now let us map the key disclosure paragraphs. ASC 235-10-50-1 gives the policy responsibility idea. Management is responsible for adopting accounting policies that conform to GAAP and result in fair presentation. ASC 235-10-50-2 explains when the disclosure requirement applies. ASC 235-10-50-3 tells us what kinds of policies need disclosure, especially policies involving acceptable alternatives, industry-specific principles, or unusual applications of GAAP. ASC 235-10-50-4 gives common examples such as depreciation methods, amortization of intangibles, inventory costing, revenue recognition, leasing revenue, and similar policy areas. This paragraph map is your exam compass. When confused, return to 50-1 through 50-4. The policy selection logic starts with GAAP. Sometimes GAAP permits more than one acceptable method. Inventory is a simple example. An entity may use FIFO, weighted average, or another acceptable method depending on the applicable rules and facts. Management must identify the acceptable methods, apply judgment, consider the entity's industry and transactions, select the method that best supports fair presentation, and then disclose the policy when it is significant. This is not random preference. It is professional judgment within GAAP boundaries. A policy note is not management saying, "We like this method because it looked nice." It is management explaining a method selected for the entity's reporting circumstances. So, what must be disclosed? The first trigger is selection from acceptable alternatives. If GAAP allows more than one method and management chooses one, users need to know that choice. The second trigger is industry-specific accounting. Some industries have specialized accounting methods, and general users may not automatically understand them. The third trigger is a unique or unusual application of GAAP. If the entity applies GAAP in a way that is not common, the note should prevent users from making wrong assumptions. Common disclosure areas include depreciation, inventory cost flow assumptions, revenue recognition, intangible amortization, and foreign currency translation. In short, disclose policies that help users understand the financial story, not policies that merely fill space. Let us close with the memory anchor. ASC 235 equals choice, method, and clarity. First, management makes a US GAAP choice where alternatives exist. Second, the entity applies a specific method based on its facts, industry, and circumstances. Third, the note gives users clarity so they can evaluate and compare the financial statements. So on exam day, remember this simple question pattern. What did the entity choose? How did it apply the method? And why does that matter to users? If this video helped you, please like it, share it with your colleagues and classmates, subscribe to the channel, and support this free education mission. In the next video, we will move from the big picture to practical note writing techniques under ASC 235.